What's up guys, my name is Kenta, and in today's video I'm going to talk to you about the importance of a trading plan, and I'm going to break down a simplified version of my trading plan so that you can use it to become a more consistently profitable trader. Alright guys, so Trading Plan 101 by Kenta Goba. Now today I put together a small presentation for you to really go over the why, what, and how of having a trading plan. And yeah, if you don't have a trading plan, this is a video that you should definitely watch because you need to have a trading plan if you want to become a consistently profitable trader. Okay, now what is a trading plan? Well, a trading plan lays out rules and conditions under which to find setups and execute trades. Now this is my definition of a trading plan. You could probably find something different on Google or a dictionary, but this is what I believe a trading plan does, right? So a good trading plan will have these four things generally. Risk management, so you have to have some sort of plan for your risk management, a plan for your entries and your exits, a plan for your trade management, so how are you managing your trade once you're in the trade, and psychology management, which I believe is one of the biggest parts when it comes to trading, is to be able to manage your psychology. So all these play a part with that, but these are the four things that I believe to be the major things that you need to get down in a trading plan. Now, why do we have a trading plan? Well, number one, trading is risky. So we need to make sure that we're minimizing our risk and we have a plan in place to do that, right? So that's risk management. And we want to have rules so that we can keep order. Now, trading in general in the marketplace is, like I've said in my past videos, is like war. And so you're out there on the battlefield trading, and things are unpredictable, things are uncertain, so that we want to have some sort of rules in place that will keep the order in our trading. Now, there's different styles of trading, and there's different types of trading, so that's kind of comes down to you and figuring out your own personal trading plan. But we definitely want to create rules, right? So that's number two. And another reason, so that we can control our emotions. Our emotions, our emotions are what really, I feel like, are the downfall of most traders. And so kind of going back to the rules, if we have rules in place and a plan in place, we stick to these rules so that we can manage our emotions and our psychology while we're in a trade, and we're not just entering and exiting trades just based off purely like, you know, feeling or emotion, right? So we want to be able to minimize emotions in trading. And number four, professionals use them. Be a professional, honestly. You know, I bet you can ask anyone on Wall Street or anyone that, you know, works for these large hedge funds or like trades for these hedge funds. I'm sure every single one of them have a trading plan. They're professionals. So do you want to be a professional, or do you want to just be, you know, I don't know, a gambler or something, right? You want to be a professional, I'm assuming, if you're here watching this video, right? And trading is equal to a business. You know, you should treat it like a business, right? And so with any business, successful business, right, they have a business plan. So basically what I'm trying to say is, you know, trading is like a business, and businesses have business plans. So you should have a trading plan because you should be treating your trading like a business. Okay, so put together a plan. And this next slide, I have basically 5 things that are very simple, and I don't go into entries and exits because that's more of the strategy piece, and I'm not going to just share with you my strategy like that. But outside of that, I think these are 5 very key things that could help you, especially if you're beginning in trading, with, you know, creating your trading plan. So as at a bare minimum. Now, number 1, and I can't stress this enough, always use a stop loss. There will always be a price that will invalidate your trade. So based off of where you're entering and based off the area that will invalidate your trade, you know, you should definitely be using the stop loss. You know, things happen, maybe you're there watching it, but still things can move quickly. You might be swing trading, but even in that case, there's times where, you could be away from your, computer or things like that. So just use a stop loss is what I'm trying to say. Always use a stop loss. Number one. Okay. Number two. Now this could be different for, different people, whatever, how you approach it, what you're doing. If you're trading like a funded account or if you're, trading your own capital, whatever the case may be. Number two, for me, max 1% per trade. Okay. Now that's max. Now that's not always saying that I will risk always 1% per trade, but my max will be 1% per trade. Okay. Now that leads me to number three, which is 2% max per day. So let's just, if you want to break it down into two, that means that if I were to take one trade and I were to lose that trade, that would mean I'm down 1%. And if I were to take another trade and I lost that trade, then I would be down 2%. So that would be the end of my day because I just reached my max per day. Now, the reason why I put this here is so that you have a limit on your trading day. And so you do not, end up over leveraging, over trading and, getting into an emotional state and making bad decisions, right? So this can be broken up, in different ways. It could be broken up into four, maybe it's 4 trades but either way, however you do it, calculate your risk, use your stop loss, and 2% max on the day. Okay. Now that's for me. So if you are, maybe you're taking 2% per trade and your max on the day is 4%. I'm just using this because I feel like this is where I'm comfortable. Figure out where you're comfortable and figure out what strategy you need to use based off of what you're trading and like how much you're trying to make, whatever the case may be. But yeah, that's how I do it. Now, number 4, this isn't exactly applied to me, but I say a minimum for most traders should be at least a 2-to-1 risk to reward ratio. Now, the reason why I say this is because then if let's just say the amount of your win rates aren't as, strong with a 2R or a 3R risk to reward ratio, you can make up for it, with the risk to reward, right? You could start off with a minimum 1-to-1 R, but I say minimum 2R, risk to reward ratio. I usually aim for at least a 3-to-1. But this way, when you're like let's just say, for instance, in this scenario with this 1%, let's say you lost this 1%, on this trade, and then you went for another one and you have a 2R, risk, you have 1-to-2 risk reward ratio. That means on your second trade, if you won that trade, you would be up 1%. And then at that point, you could just call it a day, you call it a day, you're in profit. But if you had only a 1-to-1 risk to reward ratio, then you would make that next trade and you'd probably feel a little bit more obligated to trade again. And maybe just put yourself back to where you were in the first place. So, and now if you imagine, if you are, your strategy is strong and you're able to get out the 3Rs plus maybe even up to like 5R, then you're in a good place. I think, with your trading plan, you should have, obviously like your risk, set, right? Have your risk management is very important. And then having a good risk to reward ratio is very important. So, these things right here is like definitely key. And then number 5, for me personally, I trade New York session. So I find that, the way that, the things that I have to do during the day and like my timing and everything, it just works the best for me. especially with the amount of volume that you get. That's the main thing, is that you should be trading during times where there's volume in the market, right? So that, you know, you want to make the best use of your time. And also, like, you know, with like spreads and things like that, depending on what you're trading, you know, but the key thing here is that you want to trade during times of high volume, so that you have, you know, a better potential for these type of trades that I'm talking about with the 3Rs and things like that, right? So these are just 5 things that I think are a good foundation of a trading plan. Obviously, there's so many more things that could be added to this, especially because I just have skipped over entries and exits, and, you know, things like that. So there's, you know, I'm not talking about setups and stuff here, but you definitely want to, I'm definitely emphasizing here the risk management piece. And, you know, the reason why we you know, emphasize the risk management piece so much is so that you can keep your psychology and your emotions in check, and that you're able to step away from the markets when things aren't working in your direction without wrecking your account or losing your account, and just come back the next day, you know, have a max on the day, right? If you, and this goes also, you know, in the opposite direction, you know, maybe you have like a goal in mind as well, and that could be added to your trading plan. You know, maybe you know, you say, hey, once I hit, you know, if I hit 2% on the day, then I call it, you know, but it just depends on like how you want to treat it. I think the opposite end, as far as your risk, should definitely be in place, you know, how much you're willing to lose on the day, how much you're willing to lose on the trade. So anyway, this was a quick video just kind of going over, you know, the importance of a trading plan and like why we use it, and just kind of show you, you know, a quick example of a simplified version of a trading plan. If you enjoyed this video, please subscribe, you know, smash the like button. I really appreciate you guys. And if you have any questions, please reach out. I got a free Telegram group where, you know, I share signals, I share ideas on trade setups, and really just trying to crush these markets. So, yep, if you guys, you know, are interested, look at it, link in the description, and I'll see you guys in the next video. Peace.